developing intraday traders who think trading is just about learning technical analysis, reading charts, and loading up. Here's what I've heard some of them say. I can see everything that I need to from the charts. An amateur trader. I can't make much money reading the tape. A misinformed trader. I can't read the tape. A new trader making excuses. Reading the tape is extinct. An experienced trader who has given up, believing the quants have won. Reading the tape is for scalpers. It is for hyperactive, overly caffeinated, nicotine-addicted day traders exclusively. Someone who thinks my industry is a joke and probably works for a shop that would rather be right than make money. I need to find plays that I can hold to make real money. Another misinformed trader, perhaps not an intraday one. Little do these guys know that reading the tape can enhance their P&L by many multiples. Some cannot read the tape at all. Others, perhaps you, may not even know what reading the tape is. They are that guy you see at your local driving range who only hits driver. There are a dozen other clubs in his bag, yet he falls in love with his driver. My trader's playbook is like that bag full of clubs, but I use every one of them. As in trading, you have to develop beyond just one skill, say technical analysis, and one of the most important is reading the tape. This skill will provide you with that elusive edge that traders always seek. Reading the tape is a skill that enables the intraday trader to predict more times than not whether a stock will trade higher or lower from a given price based on just examining the bids, offers, and prints. Some call it reading the level 2. The prints tell us where a stock is trading at a given moment and whether this action is on the bid or the offer. You will not always be able to tell a stock's next direction, but you will identify patterns where you can more than 70% of the time. Let me share a story with you. Back in the day, I went to our first firm party held to announce the big producers for the month and build comradeship amongst our traders. It might have been just an excuse for the firm to spend a small piece of the millions it was banking on us traders every month, and for everyone to get drunk. Steve and I and the rest of our crew headed down to SPQR, a legendary Italian restaurant in Little Italy, where the firm provided everything on the menu plus an ocean of booze. I do not know what it is about traders, but give them something for free, and you earn their everlasting loyalty. For a few months, anyway. Ever seen a trader when the free pizza shows up to the conference room? It's as if they just won the lottery. As if these traders can't drop a few bucks on some slices and Coca-Cola? Anyway, after eating too much pasta and talking to a bunch of rich 20-something traders, I myself was 20-something and not rich, I was ready to hear who were the top traders at the firm. I had some idea, but it is like American Idol. You think you know who is going to win, but you still might be surprised. Taylor Hicks beat Chris Daughtry? And it is always fun to see people recognized and happy to earn the spotlight. So, with my gut busting and anticipation mounting, the names and numbers started to be announced, starting at number 10. At $212,000 for the month, some Russian dude whose name was unpronounceable, even considering he was a top 10 trader. At $235,000 for the month, I had never seen this guy, but man, was he tanked. At number 8, Steve Spencer. Steve Spencer? Strange. That name sounds awfully familiar to my best friend from home. Did the firm have 2 Steve Spencers? And then Steve, sitting next to me, rose from his seat and lined up with the other big producers. How much did he just make? Holy cow! My best friend, who taught me how to play tic-tac-toe at sleepaway camp when we were 7, had just made over $200,000 for the month. This was a very different world from our Merlin the Magician days, and this was before the Internet.com explosion. During the Internet boom, circa 1998 to 2000, to make the top 10 at our firm, you usually had to make over $500,000. Our holiday parties were held in the grand ballroom of the Waldorf Astoria Hotel. Now that is a palace. And it was hysterical seeing some of the short, unattractive young kids walking around with tall, blonde Eastern European fashion models. I wonder how that happened. I will let you figure that out. For fun, Steve bought one of the first plasma TVs, 50, for nearly $20,000. Now you can probably buy one at Walmart for $800. And that near $20,000 was on discount. J. Toma bought a Porsche and a few apartments. Very, very smart, given the real estate boom that would soon rise in place of the dot-com bust. And we were all just reading the tape. There were no charts. CNBC was not broadcast on our trading floor. In fact, I'm not sure if we even had TVs anywhere in our space. Interestingly, during a meeting with management, Steve asked for CNBC to be broadcast on the floor. At times, there were funny moves in stocks that came from out of nowhere. Only later would we learn the news on stocks causing these strange moves. Steve's suggestion was dismissed without much comment. Just play the momentum. We don't need to know the news. And you know what? We really didn't need to know the news, because we could read the tape so well that news and charts were not really necessary. It was indeed a different era back then, but a skill learned that would not be lost. J. Toma would eventually take a few years off from trading, start a private equity fund, and give bonds a shot to round out his trading. When he returned from the dark side, bond trading, or anything other than equity trading for that matter, back to prop trading, in his first month he made more than anyone on our desk. Why? He had never forgotten his tape-reading skills. In one of his blogs, Dr. Steenbarger talked about this skill. Dr. Steenbarger, a.k.a. the godfather of modern trading psychology, wrote, "My experience is that an understanding of, and ability to read, order flow is one important factor that separates the older, successful generation of day traders from the newbies who only know simple chart patterns and indicator readings. I am one from this older generation of intraday traders, but I'm not sure why Dr. Steenbarger had to remind me of my advanced age. And so I thought this old-timer, me, could share his thoughts on reading the tape and how it impacts the developing intraday trader. For years I have disappointingly heard developing traders state, "I'm just going to focus on the charts going forward. I can't read the tape." I have heard it too many times, and not one of these individuals, not one, became successful intraday traders. The second part of our training program is called Trader Development, after 5 weeks of training and now trading live. After the close, during an initiation of new trainees, Steve and I answered their questions and discussed what was important on day 6 of their live trading career. Oh, to be young again. I can't possibly recall what I was doing on day 6 of my trading career. One of our promising trainees discussed a trailing stop for a trade in MS. Trailing stop, I thought. I didn't authorize any trailing stops. What kind of amateur trading books have you been reading, young Skywalker? This was a red flag. My impression was this talented new trader had trouble reading the tape and was experimenting with these trailing stops to minimize this weakness. Experienced traders trading multiple positions can enter trailing stops, but I always advise new traders to trade with both hands on the wheel and enter limit orders. He was jumping the learning curve. I counseled this new trader to continue working on the skill of reading the tape and to sell the stock on the offer when the tape showed weakness. And I did so because this is what an older generation intraday trader, like myself, does. In addition, I offered an analogy about not learning how to read the tape. To me, not learning this skill is like a basketball player not working on his free throws. This baller just decides to keep clanging his free throws and give up some easy points. This same new trader offered a better analogy. Hey, we hire smart kids. Obviously, this analogy was much better than mine. In the future, I will take creative license to just use his idea as my own. After all, what is the point of being a partner if you can't steal the analogies from your trainees? His analogy? Not developing this skill is like the amateur golfer hitting only irons during his round because he never learns to hit driver. I like that. Still not convinced? Let's bring in some famous market players for further persuasion. Exhibit A. From Steve Cohen, one of the greatest traders ever, of SAC Capital, in Business Week's The Most Powerful Trader on Wall Street You've Never Heard of. Everything I do today has its roots in those early tape-reading experiences. Exhibit B. Jesse Livermore from Reminiscences of a Stock Operator, Lefevre 06. A battle goes on in the stock market, and the tape is your telescope. You can depend upon it 7 out of 10 cases. Exhibit C. Linda Raschke from the essay Tape Reading on traderslog.com. If you can learn to follow the price action, you will be 2 steps ahead of the game. Exhibit D. Paul Tudor Jones in an interview for Institutional Investor magazine. At the end of the day, I am a slave to the tape, and proud of it. Traders ask, how do I read the tape? After my first blog on reading the tape, I was left with a lot of questions from loyal readers. From Chad. Could you explain what you mean when you say read the tape? Watching price action? Could you give me an example of something you would watch for? I watch price action a lot, and I've learned some things from watching, but I'm not sure if that's what you mean. Not familiar with the lingo. Thanks. From John. This is probably an amateur question, but what do you look at to watch the order flow? A level 2 screen? Thanks. From Invnin. Reading the tape is kind of tricky because of the lack of good material to study. Without knowing what to look for, we end up just looking for dancing numbers on the screen. Also, even in your blog, I sometimes get confused about what is reading the tape and what is watching the order flow. From another John. John, may I ask, what do you use to read the tape? Is there a specific platform you use, or is it the level 2 screen? And then I received this email. Hello, Mike. My question has to do with tape reading skills, a question you obviously get a lot. First, a little about my background. I have spent 16 years on Wall Street as an institutional salesperson. That's probably my problem. And have started, run, and sold my own research broker-dealers. I have always let the prop traders and market makers do their thing, of which, admittedly, I knew little about, but always tried to hire the best people I could find to manage it. That being said, I have recently, since last November, began to day trade. I have successfully been able to block out the fundamentals, perceptions, and learn to read the charts, but I'm having difficulty reading the tape fast enough for it to make a difference in my trading. I can watch the level 2 on the NASDAQ stocks and get a feel for demand but as a predictive value, but help! It's frustrating that such a skill eludes me since I know it's so helpful. What can I do to hone that particular skill? And so I sat down to answer the reader's questions. I wrote some stuff, wrote some more stuff, wrote some more stuff, and then stopped. Can I explain how to read the tape in a blog? No. Can I explain how to read the tape in a written chapter? Nope. Alan Farley of TheStreet.com wrote, reading the tape must be learned through personal experience and long observation. It is too difficult with just the written word, with too many variables and too much to share to accurately teach how to read the tape. Start by listening to this chapter, but keep in mind that nothing can top experience. Don't give up. If I may use yet another analogous example from the sports world, learning to read the tape is like adding LeBron James to your favorite NBA team. It will improve your trading that much. Videos, written materials, individual questions, more videos, and practice are required to learn this important skill. I cannot emphasize it enough. Just to give you an example of the complexity of this topic, we created a reading the tape training after our best teach this skill. Over many weekends, after he shook off the effects of a hard drinking night on the town in New York City, he locked himself into our offices and cut tape after tape to partially develop this training program. But he did it. Here's a bit of what we came up with. The tape talks to you. We were in a video review session with our June 2009 class, the best of breed whom we recruited for a year in 2008-2009. We were watching some nondescript play of a slow-moving stock, slow to me, that is, and I blurted, "Buy." And then the following dialogue ensued. Bella: "Why didn't you buy there?" Trainee: "I am not sure." Classmate: "Bella, why is this stock a buy?" Bella: "You want to buy the stock. It is strong. It is in an uptrend. The stock has potential to trade much higher. The market is strong. You want to buy into a pullback. Well, that was the buy signal." Classmate: "What was?" Bella: "They stopped hitting the bids. They hit the bids at the hole, 95 cents, 90 cents, 85 cents, and then at 83 cents the bid did not drop right away. Buy. Roll back the tape, please." And I showed them how the stock was different at 83 cents. We played the tape forward, and the stock soared 50 cents in 3 minutes. It was almost like watching review of a football game with a quarterback and examining how to read a defense. With a quarterback, though, I wouldn't say, "Buy at 83, the bids are not dropping," but rather something like, "Look to the post down the middle to split the safeties since they're in a cover 2 zone." I did not make up this buy. I did not know definitely where the stock was going, but I read the tape, and by so doing I could see exactly where to start my position, and I knew that this trade offered me an excellent risk-reward opportunity with a 60+% win rate, and those are trades we make every time. Apple CEO Steve Jobs' health. Many had noticed during Jobs' 2008 WWDC keynote address that he was thin, almost gaunt, and offered a listless performance. Steve Jobs is one of the great CEOs of our time. If he were sick, what would this mean to Apple? On a personal note, it is disconcerting and downright sick that some speculate on the health of an innovative executive for personal gain, and many of the comments about his health beforehand were cold and inhumane. But his health would move the stock, and though it is the worst part of my job, I am a trader. Apple had maintained that Mr. Jobs' health was a private matter. On January 5, 2009, the company released a statement on Apple.com that Mr. Jobs had been suffering from a hormone imbalance for a few months. 9 days later, after the close, came this news from Briefing.com. Apple CEO Jobs announces medical leave of absence until the end of June, 8533, down 238. Update. Apple CEO Steve Jobs today sent the following email to all Apple employees. Team, I am sure all of you saw my letter last week sharing something very personal with the Apple community. Unfortunately, the curiosity over my personal health continues to be a distraction not only for me and my family, but everyone else at Apple as well. In addition, during the past week, I've learned that my health-related issues are more complex than I originally thought. In order to take myself out of the limelight and focus on my health, and to allow everyone at Apple to focus on delivering extraordinary products, I have decided to take a medical leave of absence until the end of June. I have asked Tim Cook to be responsible for Apple's day-to-day operations, and I know he and the rest of the executive management team will do a great job. As CEO, I plan to remain involved in major strategic decisions while I am out. Our board of directors fully supports this plan. Stock is halted. My first reaction was, I hope he is okay. This was very sad news. I have to admit my mind wandered, concerned about this country's brightest CEO, running one of our most innovative companies. But I had to focus. The stock was halted. During the halt, I considered strategies to trade Apple. I considered all the different ways that Apple might trade. Were there support levels if Apple gapped down? If it gapped down too much, would it bounce? When it reopened, what would panic selling look like? And on I ran through the different possible ways that Apple might trade. I made notes in my journal about Apple's most important technical levels. And then Apple reopened. The price action was opportunistic, and by reading the tape, chops short and chops long were available. Let's use this example in Apple as how reading the tape can lead the way for our determination of whether a stock is probably going up or down next. Apple reopened near 78, down over 7 points from its halt price of 85 and change. And the tape told us the story. It guided in its silent way. "Bella, I'm going down now. Short me, short me, short me now." How? At 78, the offer was tested for size and would not lift. Apple kept printing on the offer at 78. My prints showed repeating green at 78, which means that the offer will not lift at this price. On our desk, we call this a held offer. And this was after the 7-point-plus gap down after the breaking news. The NASDAQ, the exchange where Apple trades, would not lift the 78 offer. Apple was a short. At 77, the offer kept coming back to 77. A bid could not hold 77. "Bella, I'm still going down, buddy. Why don't you short some more, champ?" the tape announced. And Apple traded lower indeed. At 76.50, NASDAQ would not lift the offer. This was another held offer. The same seller at 78 and the main seller at 77 was now selling at 76.50. "I'm still selling. Catch me if you can on the way down," teased the tape at this 76.50 offer. But then, like John the Apostle spreading the word of God to his followers, the NASDAQ seller lifted. "Follow me no more. I'm out of here," communicated this 76.50 seller. The pattern had changed. This repeating seller had disappeared. He had done all the downward guiding he could. This repeating, not lifting, and stepping lower seller was no longer on our box. What did this mean? Apple would most likely trade higher. So I got long. At 80.25, Apple met some new resistance, but this was some almost 4 points higher. When you learn how to read the tape, it is like the stock is talking to you. If you develop this skill and listen with an open mind, you will have an edge over your peers. Reading the tape offered an easy 1.5-point short and a simple, almost 4-point rebound. There was a controlling seller. The tape indicated as much. And then he was no more, so Apple climbed higher. And prop traders with tape reading skills were profiting all the way to the bank. Brown Brad, thinking like a trader. It is not always this easy to read the tape. But there are plays where it really is simple, and reading the tape will offer pattern recognition plays that you can exploit. On his last day as an SMB intern, Brad, our rugby-playing, investment-obsessed, soon-to-be Brown senior, sparked my interest in trading Synaptics, which had gapped down one particular AM. Synaptics, which had closed at 37-ish, was gapping down 19% on bad earnings. And after a few months with us, Brad had learned to trade, so his thoughts were now actually relevant. Brown Brad liked 28.50 for a possible bounce. And I started to get him thinking. My job is not to mandate, it is to teach our traders to think properly. Personally, I was thinking long. What class did they teach you that trade in, you Ivy League pretty boy? Basket weaving? I'm totally kidding here. Teasing is omnipresent on a prop trading desk. The stock is gapping down, and your dopey 28.50 is going to get run over like roadkill. So Brown Brad and I started a discussion. I liked him finding this 28.50 level. This was excellent detective work. This was a technical level to consider. But then I prodded him to consider other alternatives. What if the stock held a little above 28.50 and did not reach this support? Did he have a plan to trade this deviation? What if the stock traded below 28.50 and showed a seller? Would he short? And on I offered different variations of how Synaptics might trade on this open. I wanted Brown Brad to be ready for each of these possibilities, each if-then scenario. See maximizing your profits with scoring. I wanted him to be mentally agile. I wanted to make sure he would not suffer from confirmation bias. But before I finish this story with Brad, it's important that we examine confirmation bias a little bit more. Reading the tape can help us overcome this bias. Overcoming a confirmation bias. On July 24, 2009, I remember battling confirmation bias while trading Amazon, the high-flying internet retailer. I define confirmation bias as processing information in the market so that it fits your preconceived opinions. It's the deep-down incorrect principle of being right rather than making money. When confirmation bias hits you headstrong, you overvalue all the information that backs your preconceived thoughts. You ignore all the information that counters your belief. Tweet Steenbab, Twitter handle, and Tweet the Kirk Report have previously written about confirmation bias in their blogs. I want to share how I had to fight this mind-crippling disease for traders on Amazon. And what a fight it was. Steve had written a killer blog the night before about how Amazon might trade on this day. 88.80 was the mother of all levels in the after hours, right after Amazon reported earnings. Those were some nice shorts for us, chops for us intraday prop traders. With this in mind, 88.80 was a significant resistance level for on the open. See Figure 8.1 on your bonus material. And as per SMB protocol, Steve shared this important level with everyone. So what happened that day in Amazon? Amazon traded right to 88.80 and failed to push. How do you do it, Steve? We had been prepared with this significant resistance level. So I started a longer-term intraday short. I was not covering until there was a reason to cover. In the after-hours session, Amazon held 88.80 and then traded down to 85.85 and held the bid after significant volume. So we had our levels in place. And now I am short Amazon after the fall of 88.80 on the open, and I am just convinced that 85 is Amazon's next stop. Every held bid had to get run over. My confirmation bias was in the house. At 87.40, repeated buying offered support, and my confirmation bias strangled my thoughts. These guys are idiots for buying here. But having struggled with confirmation bias in the past, I observed my behavior. I needed to see the screen objectively. So I acknowledged my confirmation bias, quieted my mind, and just read the order flow along with my charts. Seeing repeated buying, I covered some Amazon, booking a quick buck and change. Below 87.40, I would reshort some more. But right now, for my trading system, Amazon was a cover for 2/3 of my position. But only through observing my thoughts, with my tape reading skills, and recognizing that I can suffer from confirmation bias, was I able to make a quality trading decision. Amazon did trade below 87.40, and I reshorted the 2/3 that I'd covered. But I was in complete control of my trade because I recognized my confirmation bias, let the tape talk to me, covered, then I reshorted when the reshort was proper. If Amazon had reversed at 87.40, I would have profited. When Amazon traded lower, I profited even more. Take that, confirmation bias. And then came 86. Now remember, my bias was for Amazon to trade down toward 85. What was this 86 buyer doing? Again, I thought, what an idiot. But Amazon would not trade below 86, and so I covered 2/3 of my position again. Another good decision. In another example of kicking confirmation bias in the proverbial ass, I was perusing Twitter into the close that day and noticed Tweet Downtrader chirp Human Genome Sciences, Inc. My alerts were set for 15 in HGSI. I had concluded that it would not be ready for a new leg up until it held above 15. But then I started reading that Tweet Downtrader was long, and I typed up HGSI and gave it a look. At 1470, I did not like how the offers were not being cleared. The tape was not bullish, so I did not buy. But this second opinion, my willingness to accept another's point of view, offered another buying opportunity into the close. HGSI was back on my radar. And this is just another example of how I fought and conquered my confirmation bias during that trading session. We all fight confirmation bias, but it will harm our performance if we do not overcome it. Let the tape talk to you. and use online vehicles like StockTwits and your peers sitting next to you to gain second opinions. If you are fortunate, like I am, to be surrounded by talented traders, listen to their thoughts. This does not mean mimic other traders. Just consider another opinion. Do you know how many times I have heard Steve chirp a position that was the opposite of mine? That did not mean I automatically flipped my position. It just gave me some valuable color on what someone else was seeing with this stock. These other opinions will help you fight confirmation bias. Back to Brown Brad. In the pre-market, Synaptics violated 2850 support. Sellers held the offer below 2850. The tape was talking to us. "Mike, I'm weak. I'm offering you an opportunity right here, buddy. Get short," Synaptics spoke to me. I listened and got short. Brown Brad watched. I'm not sure if we have clear rules on interns trading pre-market, but if we did, they would forbid trading before the market opened, as this is only for experienced traders. And when we opened, sellers held the offer, so I stayed short. This Yukon Husky doesn't fight the tape. And the bids were hit hard and offered little resistance straight down to 26. I made a chop on the short side. This is what happens when you listen to other smart people around you. Thanks, Brown Brad. Brown Brad will make a great trader in the near future if he so chooses. And he did so many things well. He was prepared, he found a great stock, he had levels to exploit. All because he read the tape. I have a dream. I have a dream. Not a Martin Luther King dream. Not even a Bill Ackman at a Target shareholders meeting dream. I have a Bella dream, a tape-reading dream. I have a dream that one day on my trading desk, one of our traders approaches me, heck, even an intern like Brown Brad, and declares, "Thank you for teaching me how to read the tape. I hit the bids in a weak stock and saved myself from a 5-point rip." Perhaps by the time this book is published, my dream will be realized, but I doubt it. I have heard of every trade where all of our traders have exited too early. It probably happens every day. Someone whines, "I got out too early." While no one ever goes broke taking profits, the angst for not holding for longer, the frustration about wussing out of a trade kills these guys. And yet I have never been debriefed on a trade where one of our guys saved points for hitting the bids and getting one of the few prints before the stock plummeted. Never. This all reminds me of the Orny Adams joke in The Comedian, a documentary about stand-ups. I will paraphrase Orny's joke. 9 times out of 10, when I see an attractive woman walking down the street, I turn and take another look. 10 times out of 10, she does not turn around to check me out. Maybe one day a trader will approach. Oh, to dream. A rip saved. Here's an example of G-Man saving himself from a 20-point rip. He still hasn't thanked me. There was some great action in First Solar after reporting earnings in July 2009. The price immediately drove up from 175 to 187. See Figure 8.2 on your bonus material. There was a pullback to 180 where the bid momentarily held before dropping out to 179. Before you could blink, it drove up to 190. This powerful drive got us to start thinking about where to buy on a pullback. G-Man was thinking 185. I too thought this would be his good spot to get long, and Steve agreed. But then something changed. A seller appeared at 187 and actively held the offer. Steve thought to himself that this was still 2 points from the 185 area, so perhaps a long would still work at that price. FSLR started to trade down from 187 as sellers stepped down to lower prices. Then what appeared to be the same seller that Steve saw at 187 was at 185.25 holding the offer. Buying at 185 was no longer an option for Steve, so he passed, but G-Man bought. Oh, to be young and bold. When the 185 bid dropped, it traded down to 180 in about 60 seconds. G-Man offered 184.75. Nothing. G-Man came lower to 184.25. Nothing. The tape showed no buyers and screamed, "Sell, G-Man, sell!" G-Man smacked the 181 bid. Next stop, 166. Great bid hit, G-Man. Great job of avoiding a disastrous rip. Did I mention he still hasn't thanked me? The tape spoke to G-Man. The 185.25 seller who stepped down from 187 told him that if 185 did not hold, then there was risk below. When this level dropped and his low offers were shunned by market plays at 184.75 and 184.25, he knew he was in trouble. The tape showed FSLR's weakness, and G-Man's only option was to try to get out with as small a rip as possible. And he did. By the way, G-Man re-entered FSLR and caught a 5-point up move from 166 to leave positive in FSLR and hit the gym. Now that's mental agility. Combat high-frequency trading. In the summer of 2009, there was a huge controversy in the media and Congress over high-frequency trading, HFT. HFT consists of computer programs automatically buying and selling shares faster than you can enter orders manually. Zero Hedge, a popular industry blog, www.zerohedge.com, 6 months young, exposed unfair advantages gained by firms using supercomputers to game the system. So successful was Zero Hedge that the 800-pound gorilla in any room deciding SEC policy, Senator Charles Schumer from the great state of New York, moved to ban flash orders, which are part of HFT's strategy. And thus they were so removed. Score one for the bloggers. Programs have been the nemesis of the intraday trader for many years, and many of those who claim you cannot read the tape anymore suffer from an inability to compete with these new algos. In all honesty, HFT does make it more difficult to read the tape. That's right, more difficult, not impossible, at least not to me. As soon as I dropped off this manuscript to Wiley, I started writing an article for SFO magazine on this very topic. Talk about topical. Computer programs have been created by program traders to take the other side of trades made by active traders like me and force losses. I wrote about this in a blog, Rant, concerning a program I delightfully labeled the Buy the New Low program. G-Man calls it the Moron Piker Dopey PhD Has No Idea How to Trade program. Both titles are accurate, and the strategy is defeatable if you know what to do. Algorithmic programs that will be eliminated. Recently, I wrote about secondary plays and a program we call Buying the New Low. When a stock makes a new intraday low, algorithmic programs buy this new low because they predict that short-term traders will get short. These programs are betting that only light volume will enter the market when a stock makes a new low. They buy the new low, tick higher, and force the weaker short-term shorts to cover. Basically, they make pennies on many who are hitting the new lows in stocks. Let's discuss why this program, particularly below significant technical levels, has not worked, will never work, and will be eliminated by the market. I just want to say one thing about the dopey quants who employ this specific program. You are going to harm your firm. This program has not, cannot, and will not work. You need to take this program and toss it out with your leftover pizza boxes from Friday. For the retail traders, trading firms bring in pizza for traders on Friday. And let me be clear, I am only writing about this one program when stocks have broken very significant support levels. And obviously, we have a great deal of respect for the brilliant quant traders who run profitable, ingenious algorithms. 1. It took us about a second to decode. 2. You can't play games like this below important levels. What are you going to do if a huge institutional order for millions of shares enters the market, and you are caught long 200,000 shares as SAC Capital or T. Rowe Price hits the crap out of the stock for 5 points? Because a stock below a secondary price can cause panic selling. What exactly is going through those brilliant mathematical minds of yours? Did they teach you this at algorithmic trading camp? Do you have so little regard for the market that you will disobey fundamental trading rules to make a few pennies? Didn't firms like yours lose enough money when you tried these tricks when the subprime mortgage mess first hit? Your firms, or firms like yours, were decimated because you tried to get long, very weak stocks when they made new intraday lows and forced short-term traders to cover. Think CFC. Oops. For those at home, the programs bought the new intraday lows in the CFCs because they knew short-term traders would get short. The programs would buy and then quickly tick higher, trying to force the short-term day trader to cover. This did not work. Large institutional orders flooded the market. When the programs tried to uptick, the large institutional orders whacked some more of their bids and went low offer. The programs were forced to scramble and get out of their short-term positions. These programs recognized tremendous losses. These programs were eventually shut off by their firms. Didn't you, your friends, or quants like you lose enough money when you tried this nonsense next with the financials? The financials made new intraday lows, and you turned on the same dopey program. That didn't exactly work in GS, MER, LEH, BAC, and AIG. Again, oops. I know a lot of traders who cannot trade against algorithmic programs and have been forced out of short-term trading. All it takes is some effort and thought to learn how to trade against them. There are things we teach to combat the programs, and I personally don't have a problem with programs trying to make spreads and quick money. I do have a problem with quants who have such a fundamental disregard for the risk of buying stocks that are technically broken. I do have a lack of respect for strategies that disobey very basic fundamental trading principles, such as buying stocks below significant support levels. I do take issue with quants who keep trying failed techniques. To these quants, I understand that your math skills are genius. But superior math skills absent trading skills will not be rewarded by the marketplace. You are like an annoying gnat that requires nothing more than some bug spray. You are like that guy everyone can't stand on their pickup basketball team. You shoot every time down the court. You score a ton of points, and your team with more talent loses. And then you think you have had a good game. Develop a new program, or the market will eliminate you. As I mentioned, this was just a rant. I was purposely rantish. Steve called me in a huff, worrying about my incendiary tone after publishing these thoughts. I told him to go back to eating his oatmeal with walnuts and reading the Sunday Times. I wanted to start a discussion in the trading community. By the way, our blog traffic climbed 2,000% on that day. And I sure did, as this blog was linked and passed along to influential trading bloggers. Since the inception of programs, it has become harder to read the tape and thus trade because of HFTs. This is just something as traders we must learn to adapt to. The Buy the New Low program discussed previously is annoying but easily dealt with. But admittedly, there were more difficult programs which we compete against. Let's examine another day where adjustments needed to be made to trade against the algos. High-frequency trading and Amazon. On July 24, 2009, we had such an example of HFT that I have learned to avoid. At 8660, Tweet SMB Capital tweeted, "If you want a good example of HFT manipulation, watch Amazon around 8660. HFT was dominating trading around this level. I could not read whether Amazon would trade higher or lower, and my charts were not definitive. A few times I thought I could read the tape and made plays around 8660. The results? A short-term short in front of 8660 ended in a loss of 25 cents, and my entry and exit prices were much worse because I couldn't get this seemingly liquid stock at the price I preferred. A long above 8660 ended in a small loss. Okay, so now I see a pattern. The short-term longs are losing, and the short-term shorts are losing, and our losses are greater than normal. Now I had a choice. I could continue to pretend that I could compete against these difficult programs at this price. This undoubtedly would have concluded with me giving back all of my gains. Or I could choose a different path. And so I tweeted, A great example also of when we shouldn't play in Amazon around 86.60 because of HFT manipulation. Wait for it to trend, then play, but not now. I waited for Amazon to pick a direction. Around 86.40, I could read the tape again. Amazon was most likely headed lower. I reshorted, and I caught a nice move down to 85.90. HFTs make our trading more challenging. There are setups and time periods we need to avoid, such as Amazon at 86.60. But trading is trading. We look for strong stocks and get long. We search for weak stocks and get short. Yes, HFTs shakes us out of more positions. Yes, it is harder to get stock. And yes, it would be nice if HFTs were not as prevalent. But guess what? HFT is here, and it will only grow. So as a trader, I must adapt. But we as traders can limit their impact through our own trading. We can choose not to play when HFTs eliminate our edge. If you go to a local restaurant and they charge too much for what they offer, then most of us choose not to revisit. And we can do the same when we spot HFT. If you do not play, then they cannot take your money. Now, that does not mean that adjustments should not be made to HFT. There are solid arguments being proffered that changes must occur. Manipulation has no place in the markets, and we should all have access to the same order flow. The market should reward the best traders, and not those with an unfair advantage, such as access to exchanges some of us cannot reach. But we can all still compete, even with all this HFT. When we went to 1/16ths back in the day, I heard this was the end of intraday trading. When we transitioned to pennies, I heard that it was all over for the intraday trader. When hybrid was introduced, this was supposed to be the final nail for us. When programs entered our markets, this was supposed to manifest our dissolution. Some traders were forced out during each of these changes, but good traders adapt. They find new patterns to exploit. HFT will not be our ruination. It is just another market challenge that we must learn to overcome. I would like to see some changes made to HFT, but you know what? If things remain the same, then I will adapt. Today I'm at the office, on Saturday, ripping through some charts for excellent setups on Monday. And now that SPY closed above 96.10 on heavy volume, I like the way the market is set up. This is a market overflowing with opportunity. I will figure out how to make money even with the HFT. I am a trader. See Figure 8.3 on your bonus material. Look, algorithms and HFT are here to stay. As traders, it is our job to exploit patterns and profit. We don't complain. We don't enumerate all things unfair in the trading universe. First, it would take us too long to complete this list. Second, that does not make us money. We take money from the markets by finding patterns, improving our skills, such as tape reading skills, and adapting. Trading is a tough job. Algorithms and HFT make our job tougher, but we have learned to manage them, and so can you. Reading the Tape 101. There is only one side to the stock market, and it is not the bull side or the bear side, but the right side. Jesse Livermore. When we read the tape, we determine whether there are more buyers or sellers at a given price. We carefully watch order flow. We search for what we call held bids and offers, and unusual volume done at the same price that creates a key intraday level. Let's get to some definitions. A held bid. A held bid is when a buyer buys 5 to 10 times more shares than we had expected on the bid. For example, if a stock creates a pattern where it does 5,000 shares on the bid before dropping, and then 50,000 shares print at the same price on the bid, and the bid does not drop, then this is a held bid. This is information that a huge order may be present. Why is this guy buying so much at the same price on the bid? Probably because he has a lot to buy. It is not 100% determinative that he has a huge order, but it is important information that he probably does. And if we spot a held bid often, we get long. An important intraday level. I make my best trades after I spot unusual volume at a particular price. We watch a stock trade, and every 5,000 shares causes the stock to move up more than normal. And then, say 250,000 shares are done at the same price, or around this price, and not in one singular print, for a stock in play. I am now interested. This is called an important intraday level. The trading play after spotting an important intraday level? If the stock ticks above this level and bids hold, then I am long. If the stock ticks below this level and the offer holds, then I am short. I am holding this trade for a longer-term intraday trade, say a few hours, instead of a few minutes. I expect the stock to move significantly away from this level. There was a huge battle. Now the fight is over, and now the stock needs to go find a new price. That might not be for a few points, so I hold. The key to being a tape reader is locating where most of the volume is being done intraday. This volume may not show up on your charts until after a significant move. Remember, charts are, at their core, lagging indicators. Reading the tape is a leading indicator. Use an unbiased principle to play both sides and be mentally agile. So I am long when bids hold and our stock is in an intraday uptrend, unless the stock is near significant technical resistance, and short when offers hold and our stock is in an intraday downtrend, unless the stock is near significant technical support. To be most accurate, there are a few exceptions to this, but this then would move beyond reading the tape 101. So often in the business of equities trading, there is a long bias, mostly perpetrated by the mutual fund and 401k industrial complex, and sales-focused commercials for T. Rowe Price of people running on the beach and the sound of a baseball bat hitting singles. Do not let the popular financial media and fee-hungry asset managers influence you. That's not what we do as traders. A long hold for me is 5 hours, not 5 years. Make sure this is in your head when reading the tape. Putting more trading plays in your quiver. Intraday prop traders caught a nice trade in Research in Motion on the open in the spring of 2009. We used an intraday support level from the previous trading session to start a core long in RIM the next day. Again, we based this long thesis in tape reading. Let's discuss. RIM had finished up over 20% on a Friday afternoon. RIM had trouble trading above 60 into the close, but still finished impressively. During the midday, 58.50 was a huge level. This level was violated only temporarily when the market was weak on this day. The moves through 58.50 looked more like a shakeout. Yet RIM did not trade below 58.31 on this Friday during this temporary move below 58.50. Then RIM reheld the 58.50 level and traded towards 60, where its momentum ran out of juice. After a long look at the points on this Friday, we came up with some important levels. 60 was resistance. 58.50 and 58.31 were support. On the following Monday, the market opened negatively and RIM followed lower. RIM opened below the 58.50 level, traded below the next support at 58.31, so I got short. I noticed too much buying at 58.25 and 58.20. If RIM was weak, it would have traded down quickly below the 58.31 level. It did not. There was buying at 25 cents and 20 cents. There especially was some buying at 58.20. There was significant volume at 58.20. The 58.20 level held. See figures 8.4 and 8.5 on your bonus material. For new traders, this can be a tricky trade. RIM is below 58.31, the support level. Almost always we do not get long below support levels, but there was significant buying just below it. The tape communicated that RIM was strong. I flipped my position and started a core long position. RIM opened lower mostly because of the market, but significant volume was done at 58.20 and that level held. This is what an intraday bottom can look like. This is a great example of why learning how to read order flow is most important when you begin. Learning this teaches us that the move below the support level, 58.31, did not signal a true breakdown. I did not just blindly short below the technical support level and expect that RIM could only trade lower. That is not trading. That is called being stubborn and overly simplistic, if not arrogant. If only trading could be that easy. We trade with an open mind. We consider all the possibilities for how a stock may trade during our every trade. We constantly evaluate if we are just wrong with our positions. There was too much buying below the support level. There was a held bid just below the support level. The short time period RIM traded below the support level gave us pause to trust a break. So we got long. Now remember, RIM was exceptionally strong on the prior Friday. Stocks after days like that one Friday tend to trade much higher. Also, RIM is a stock that we can all understand. The BlackBerry is an awesome product that many of us use. This is an easy story to get as traders trading its stock. RIM is one of the top 5 technology companies, though this could change by publication as technology quickly changes. Top companies with easy stories to understand get bought en masse. With good news, hedge funds, mutual funds, the big banks, and retail investors want to own this stock. And I did, and others on our desk did as well. 60 was our next resistance level, so I lightened up in front of 60. 60 did not offer much resistance that day, so I re-established a core long position. I lightened up near 62.75 into the close as this offered resistance. I re-established above 62.75. I held my core into the close where I exited at 64. After all, RIM had shown us no evidence that the top was near. When and where to load up and still limit your risk. Not only can reading the tape offer trading plays that may not be apparent on your charts, but it will help you load up when appropriate. Everyone wants to load up. It's why we get into trading. Loading up defines the thrill of the kill. Once I heard a new trader utter, "I'm going to load up if ARCA holds the bid above 75 cents. She is learning. Learning to read the tape enables you to find spots where you can load up while contemporaneously limiting your risk. How so? I was trading AIG in the summer of 2009. So were a lot of prop slayers. In fact, my first show on StockTwits TV, the brainchild of Howard Lindzen and Phil Pearlman, I discussed my AIG trading. During the broadcast, viewers were encouraged to send me messages directly to tweet SMB Capital on Twitter, which I tried to answer. It is a lot of fun conversing with this highly interested trading audience, and it was fun to see the desk trading so well at the start of August 2009. June had been a tough month. July was much better. And this August started like August of 2007, the beginning of the subprime crisis. And that was a great month. On one of our better days in August 2009, we traded AIG, the home builders, and ETFs. And AIG offered an excellent trades to hold that we should discuss. We spotted this by reading the tape around a key inflection point. AIG opened and quickly traded down a few points to 25. It started a range between 24.90 and 25.10. AIG seemed to break out above, but it was a fake breakout. And then AIG appeared to break down below 24.90. But that was a fake breakdown. Great! Those damn quants are trying to steal our money again. I started the day getting caught in a fake breakout and then a fake breakdown. Those PhD programming punks, geniuses, were at it again. But the trading day doesn't end until 4 p.m., so there was time to make it back. The nonsense of really just above 25 and below 25 continued some more. But I hung in there. I kept my losses at a minimum. And then it came. The bullish flag was created. A gift from the trading gods had been delivered. I had a setup to crush. AIG finally made an explosive move above 25.30, the intraday resistance, traded strongly on high volume to 25.75, and consolidated. As G-Man would say, it's party time. AIG met some resistance at 25.75, but really it was accumulating stock for its next up move. By reading the tape, I could see its strength. The pullbacks were nominal after an explosive up move. When I bid for stock, I was immediately cut in front of by anxious buyers. It was impossible to get hit on the bid, a bullish signal from the tape that AIG was soon to trade higher. Would it? AIG held above 25.75 finally. See Figure 8.6 on your bonus material. By watching the bids, I saw that the buyers were now in control above 25.75. The bids were hit, but holding and stepping higher. Again, a bullish signal that buy orders were overwhelming the sellers, and we were soon to be headed higher. If the bids had been quickly hit and they dropped below 25.75, then I would have had a signal that AIG was not ready, and G-Man's party had not yet arrived. But the opposite occurred. The bids held, and they were stepping higher. Now was it party time? Fortunately for G-Man and the rest of us, it was. AIG started an uptrend to 29. This was a trade you must be in. Not only did reading the tape offer an opportunity to add more size, but my risk was limited as my stop was just below the 75-cent inflection point. Furthermore, the held bid above 75 cents was my catalyst to pounce. So I knew to load up, had minimal downside, saw where and knew exactly when to load up because of my tape reading skills. This is a powerful trifecta for the intraday trader. Long above 25.75 as a trades to hold was the play, and I loaded up because the tape confirmed what my charts were indicating. But still, to be safe, I needed to see the bids hold above 25.75. I was able to buy 3 lots when the tape signaled that AIG would trade higher. And I limited my risk. If the bids dropped the 75 cents, then I would have hit out of 2 lots and started over. So now I had a large position. I had protection and a very tight stop that would have indicated my trade was not yet ready to work, and I never had to sweat. AIG quickly traded higher. I was in the money every second of my trade, all because of reading the tape. Have I not said that enough in this chapter? I'll say it again. All because of reading the tape. If I had just followed the charts, I may have bought 75 cents and got shaken out below 50 cents, as occurred. But since I waited for the bids to hold above this key inflection point, I did not get shaken out. I had a nice position, and I was never out of the money. That is being in a position of strength as a trader. And I made a chop. A love affair with charts. One of my favorite prop trainees at a nearby firm never bothered to learn how to read the tape. He loved his charts too much. All those deep reds and glorious greens were breathtaking to this young trader. To him, they never lied. But he was not trading. Trading is making plays where you have a statistical advantage of profiting. He was rolling the dice, effectively gambling. But it gets better. He did not even know how to read the charts. Like many developing traders, he thought he did. So he failed. Traders ask, "Can't I just read charts?" I received an email one night during an epic Cavs-Celtics playoff game. I have to admit I was more interested in the game than responding to this email, but I took a swing at it the next morning. "Hey Bella, this morning when you were trading USO on the open and buying at the 32 level, initially 32 had dropped, but you mentioned to someone else who was also trading USO that you did not hit out because you wanted to see the offer hold below 32. What was the reason for giving USO that little bit of time to see if it would hold an offer below 32, as opposed to just automatically hitting the bid once 32 dropped the way you normally would? Was it something you saw on the tape, or was it just because 32 was a really important level and wanted more confirmation than just a bid dropping for the first time?" My response: I bought USO just in front of 32 yesterday a few times. 32 has been a significant support level in USO recently. The first time USO traded up toward 30 cents. It slowed, and I sold half. I bought some back when USO traded near 32 again. The bid dropped 32, and USO showed me the 98-cent bid. I did not hit it. Thus the question above. I keep tight stops. I was long USO because 32 was the support level. So why didn't I hit USO when the bid dropped 32? Good question. My exit plan was not to hit USO until the offer held below 32 or the 31.95 bid dropped. Stocks often pretend to break levels and then trade much higher. I did not want to get shaken out in a fake breakdown. Further, I was holding USO for a large move. USO had bounced off of 32 the day before and hit 80 cents and even the whole a few times. This intraday there was some resistance near 32.50. So my upside at a minimum was 50 cents, perhaps 80 cents to $1. My risk-reward was still more than 5 to 1 if I gave USO to 94 cents-ish. But there is a much bigger issue here, and it is something that we preach on our desk daily. Do not fall in love with charts. The order flow is more important than any chart. Use your trading skills to supplement your chart reading. Since I did not see an aggressive seller before the first time USO dropped the 32 bid, I did not hit out. If I had seen the seller, I would have been quicker to hit out. It is easier to learn how to read the tape, or at least learn how to read the tape for signals to buy or sell, than to learn how to trade with just charts. The traders I know who mainly trade off of the charts these days all learned first how to read the tape. And while they claim that they do not look at the level too much these days, many are just mistaken. They have so mastered reading the tape that they do not even understand that they are using it to lighten up or where to enter with their trades. G-Man was offering his thoughts on a particular trading day on his Friday spot on StockTwits TV. After his appearance, I heard through back channels that young ladies from the StockTwits community started asking, "Who is that G-Man guy?" Oh, to be young and single. G-Man discussed BBT. He highlighted a bullish chart pattern. BBT offered the opportunity to exit anywhere from 26.50 to 27. See Figure 8.7 on your bonus material. G-Man started his position at 26.50 because he spotted the bid buying and holding at this price. He saw the bullish chart pattern and then found the best price with his tape reading skills. If he had started his position at 27, this would have completely changed the risk-reward for this trade. If he entered at 26.80, he may have been shaken out of his position. But after he saw the buying at 26.50, he loaded up and was able to catch a significant up move with size. Who is better than you, G-Man? Using charts is an art, not a science. It takes years to become a great chartist. As an example, I knew one prop trader at it for a while. He never made money. We would periodically IM about trading, and I could tell he had no idea how to read the tape. He was absolutely mesmerized with his charts. He couldn't decipher a held bid from an orange. He failed. Another trader I knew after a year proclaimed, "I have trouble reading the tape. It just is too fast for me to pick up." He didn't make it either. I just don't get why people fall in love with their charts. There is so much more information from the prints, inside market, than the charts for short-term traders. And for long-term traders, reading the tape could dramatically improve their entry prices. How much more money would long-term traders make if they improved their entry prices, making more per trade? And how much more would they take home if they improved their win rate by starting their positions at better prices, decreasing the trades in which they were stopped out? Much, much more. Again, it is like people are more interested in staring at their pretty charts than in making money. If I told you I could offer information that would help you increase your win rate for trades, wouldn't that interest you? Gary B. Smith, in How I Trade for a Living, offered some very interesting thoughts on charts. Charts just weren't getting it done for me. They were great at telling me about the past, but were of little use in foretelling the future. Some who worship at the altar of charts may counter that the purpose of charts is not to predict, but to provide hints or clues to the future. Regardless of the semantics, I would have been much better off never looking at a chart. So it wasn't a tough decision in the spring of 1985 to throw out the charts and never consult them again. William Eckhart, from The New Market Wizards, written by Jack Schwager, commented, "Most things that look good on a chart, say 90%, don't work. But with reading the tape, you can profit from day one. In fact, it's very simple. When we find a stock in an uptrend and then spot a held bid, this is a long. Easy, no? It will work more times than not. When you spot an important intraday resistance level cleared, you get long. Again, not difficult. And on the first day you trade live, you can crush this simple pattern. Mind you, do not discount the use of charts. We use them all the time. But it is hardest to start your career by relying solely on the charts. And the guys who do are great chartists. But remember, they have deeper pockets, so they can withstand a drawdown that you might not be able to. Please understand just how good they are at reading charts, and the years of experience it took staring at hundreds of thousands of charts to achieve this expertise. When I catch some guys falling in love with their charts, I simply state, all the best traders on our desk have learned how to read the tape. G-Man, Moneymaker, Dr. Momentum, J. Toma, the Yipster, Z-Money, Mr. Spencer, Franchise, G, Tickster, Roy. You will not become a good intraday trader if you do not develop this skill. It's up to you. How do I read the tape? There are old school traders who have now transitioned to charts exclusively, or so they think. They started reading the tape and then gravitated toward charts. But they still use their reading the tape skills. They undervalue these skills because they are so focused on their chart patterns. But they exit positions that are not working for them right away because of the tape. They choose entry points superior to lesser traders because of, yes, their ability to read the tape. I know when I am making technical plays that I exit trades when I do not like the price action. I can just tell by the way a stock prints or how the offers step down if a stock may not hold an important technical support level. And so I exit. Sometimes my decisions are so fragile that if you pressed me, I could not verbalize exactly what I saw from the tape that made me exit. I kinda know it when I see it, based upon years of just watching the damn tape. Every so often we invite potential candidates to visit our desk and sit in on a video review session. We were considering a middle-aged gentleman who had worked his whole life in IT at Goldman. On this Saturday, he sat watching film with our desk. As we watch, I will call out where a stock is a buy or a sale, so our guys learn where to buy and sell. After the class, this gentleman approached me. IT guy. Mike, had you traded BBT on that day? Bella. No. IT guy. How did you know when it would go up and down? You kept predicting where it would trade. Bella. I was reading the tape. He looked at me incredulously. IT guy. But you were never wrong. Bella. I did have a good feel for that stock. IT guy. That was incredible, how you did that. Did you really think I would leave this anecdote out of my book? If you are a trader who has started your career underperforming and have not developed the skill of reading the tape, then please do not get discouraged. And do me a favor, please. Go find your trading results, put them in the shredder, and move on with your trading career. It is too hard to start your career exclusively by reading the charts. If you do so, you are trading with the equivalent of one hand tied behind your back. You are missing an immensely important skill. Learn how to read the tape. Remember that the best part of trading is that tomorrow you can start getting better. Well-rounded traders know how to read the tape. They also know all the little trading tricks to improve their P&L, a little something I like to call scoring, which will be discussed in Chapter 9. Chapter 9. Maximizing Your Profits with Scoring. Some prop traders, as long as they take home a decent-sized check every month, are content. Not me, and certainly not any of the traders I employ. There are always ways to squeeze more profits out of each trade, just by some basic tweaking. I call it scoring. Scoring, simply put, is the skill of maximizing your P&L. Professional golfers often comment, "I struck the ball solidly, but I didn't score well." Fortunately for me, I don't have this problem. Generally, I don't hit the ball well, thus I don't have the opportunity to not score well. Similarly, a basketball commentator often differentiates a shooter from a scorer. As a professional trader, you can make good trades during the month, yet not maximize your P&L. Do you score well? There are steps that you can take to ensure that you are scoring well. You can sit at your trading station all month with the same skills as those around you, equal preparation, the same market opportunities, but end up with a P&L far worse than the guy sitting next to you, despite all things being equal. Economists call this ceteris paribus, for any Latin geeks listening to this book. So let's discuss a few things that will help you maximize your trading paycheck at the end of the month. Let's discuss how to score as a trader. Setting your maximum intraday trading loss. First things first, set a max intraday trading loss. There will be days when you just do not have it. Most traders trade 48 to 50 weeks a year, 5 days a week. Is it likely that you will be on every single one of those days? As someone who's been doing this for over a decade, I can tell you outright, no. Traders are on par with professional athletes, as our job is entirely performance-based. Win or go home, so to speak. Remember that great Michael Jordan commercial when he talked about how many times he failed in his career? I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Just like Michael Jordan was off on certain nights on the court, so will you be on certain days in the market. Why do you think coaches pull their players when they are not playing well? They are more harmful on the field than off. When you are underperforming, you are hurting your team and your trading business. You need a system to yank yourself over to the bench. A stop loss is your answer. When you first begin, set your max intraday loss for half of your median gross P&L. So if you make $1,000 gross on a median positive day, then set your maximum loss limit at $500. As you become more experienced, you can adjust this max loss limit to half of your last best trading day. But even the most experienced trader must set a limit. Over the years, I have learned to become a very consistent trader. But in the fall of 2008, I was having a horrid day. I got caught in multiple reversals, my kryptonite, and was down a lot for me. Make sure whatever trading platform you use has a loss limit feature. SMB uses Lightspeed, the best intraday equities platform available as I write. We had switched from another platform to Lightspeed about 12 months before this ripper of a day. And on this day, I went to enter some new orders. They were not going in. Then the following transpired. Bella. Anyone having trouble entering orders? Steve. Not me. G-Man. No problems, Bella. Bella. What the... Expletive deleted. I still can't enter my orders. The Enforcer. Did you hit your loss limit? Bella. I don't even know what my loss limit is. So I called up the Lightspeed help desk. Sure enough, I had hit my loss limit, but didn't know it. It took me a year on Lightspeed to have a day where I was marked down enough to even learn that I had a loss limit. Hey, I told you I am a consistent trader. Bella. Can you raise my loss limit, please? Lightspeed help desk. Okay, have your manager call in the request. Have my manager send in the request. This is one of those moments where you quickly calculate 3 responses. 2 are not appropriate. One might be, I am too rich and famous to deal with this nonsense, son, So get me some more buying power, pronto. And then there is a third, which I chose. Bella, aren't I the manager? Lightspeed Help Desk. I don't know. Are you a manager? Bella. I would hope so at this point, but on some days, based on how my desk ignores me, sometimes I wonder. The nice young man at the help desk raised my loss limit. Apparently, I do have manager status. It had been much lower than half of my last best trading day, and thanks to my Lightspeed interlude, I actually saved thousands, since my dopey orders, if executed, would have manifested larger losses. Steve has a tendency to exceed his max intraday loss. We have code words, just like when we were playing high school basketball, which, if spoken by me, informs Steve that he is done for the day. Since we are so creative, my code word to him is Mr. Spencer. When Steve hears Mr. Spencer from me, he knows to trade out his positions and then shut it down for the day. This saves him thousands every month. Even the best of traders like Mr. Spencer have set loss limits. So should you. Trading based upon the time of day. I tailor my trading based upon the time of day, the open, midday, or close. Dr. Steenbarger coached Dr. Momentum that each time period should be treated like a different business. I trade with the most size, most frequently during, historically, my most profitable time period. Makes sense, no? I trade best on the open, meaning I make the most money on the open. My trading statistics confirm this. As such, I increase my size during this time and make more trades. The open tends to last about an hour. My stats also show that during the midday I do the worst. So I lower my tier size and keep my stops tight. I only make trades that offer the best risk-reward during this period and make fewer trades. Into the close, stocks are more directional, so I stick with those that are trending up or down in the last hour of the trading day. I raise my tier size from the midday, but not as high as on the open. The danger of midday trading. As I just said, the midday period, 11 a.m. to 3 p.m., is the most difficult and least profitable time of day for me. I am not alone. Why? The market is slower. There is less volume and liquidity. A small order can cause a stock to move much more than you would anticipate. More strange moves in which you are not able to quantify, such as a surprise news announcement, do not allow you to calculate risk-reward as you would normally. A good trader makes note of what time of day it is, when he trades most profitably, and adjusts his trading to fit such times. There will be favorable risk versus reward opportunities midday, but much of this time for me will be spent finding stocks to trade into the close when the volume picks up. Following is a list of adjustments you should consider for midday trading if this is your worst time period. Increase your intensity and focus. Lower your tier size to the lowest size of the day. Wait for great entry points. Take your profits quickly. Don't double down. Lower your loss limits to the tightest of the day. This is the most dangerous time of the day. A small order can move most stocks significantly. Be disciplined. Sometimes good trading is not trading at all. Stocks purposely appear tempting, yet are, in fact, not favorable risk-reward scenarios. Most importantly, gather information for the close. Watch the stocks trade. Search for trading ideas. Check www.briefing.com for economic news releases coming out. Gather some ideas from the traders around you. Find support and resistance levels, and set your alerts for these levels. New and developing traders tend to overtrade midday, and we see this on our desk. As such, we have implemented rules to regulate this. Basically, midday is just for exploiting our best setups and gathering valuable trading information for the close. If you are overtrading during the midday, you are not maximizing your P&L. In fact, it's a great time to give back a lot of the gains you might have made on the open. Your numbers at the end of the month will not reflect your true trading potential. Make the most trades with the most size during the trading periods that statistically are most profitable for you. Money saved during your weaker trading periods is money earned. Consistency. Everyone knows someone at some firm making a killing. Everyone. Even the new traders. And new and developing traders tend to overvalue this information. I want to be like so-and-so, big man on the desk, at XYZ firm, Chops Bank and More Chops Trading, LLC, who makes mid-seven figures. These newbies then develop theories about how to become that trader and bank that mid-seven figures. Oh, do they develop theories. I need to learn how to take pain, is one thought entering their minds. One of our guys, Playmaker, believes this. This drives Jay Toma and the rest of the senior staff nuts. The fact is that most trades you make will start working for you right away. But the new traders also hold stocks that are trading against them longer because they mistakenly believe this is how you improve. But common sense tells us that when a stock trades against your predetermined exit price, holding it only increases the chances that you will lose even more money. Baby steps. Mark Sperling of T3 Capital, considered one of the great day traders on the street, came to speak to our firm in the summer of 2009. Mark is one of those traders who everyone wants to be, probably because his annual P&L is among the highest of those in our tight-knit community. Mark counseled that becoming great takes time. There is a process that every trader must go through. You cannot skip steps. When he first traded, he was positive every single day. He made sure that each day he stepped outside his comfort zone to get a little better. He got better slowly, incrementally, while remaining consistently profitable. Stepping outside one's comfort zone, while initially painful, pays great dividends down the road. New traders mistakenly think that losing $5,000 is how they will learn how to make $5,000. This is not true. To make $5,000, you must first learn to make $500 consistently. Then you can gun for $800. Losing $5,000 in a day when you begin only teaches you how to lose $5,000 and how to trade irresponsibly. As Bill Murray said in the film What About Bob? Baby steps, baby steps, baby steps. I am amazed at the new traders who have never made over $10,000 in a month, who do not recognize that 17 out of 20 days at $700 a day is a pretty good month. Do the math here. 17 days at $700 a day is $11,900. Assuming the loss limit is $500 a day, typical for a new trader, the 3 negative days take the total down to $10,400. Still not a bad month while just beginning. There are so many traders capable of doing this, yet they do not achieve this goal because they are focused on making the elusive $10,000 in a day, an opportunity that is seldom available given their undeveloped skills. This 5-figure-a-day goal is counterproductive. Your goal is to make as much as you can as you are developing and improving, not to show how much you can lose by trying to be a trader you are not ready to be. Here is what I see too often from my seat. I spot a new trader with the ability to make money. He has 2 solid days a week, so I know he can do it. But then there are 2 other days when he starts negative, gets more negative, and then finishes much more negative. If you can learn to eliminate 1 day a week from negative to flat, you can substantially increase your take-home. If you look at G-Man's numbers at the end of the month, he is generally gross positive 17 out of 20 days a month. Same with me for that matter. This should be your goal while building your trading account. Ask yourself how much you can make at this point in your career so that you are gross positive 17 out of 20 days in the month. Achieve this goal, and then next month start working on an incrementally better P&L. Remember, baby steps. Proper sizing. There exists a myth that you need to trade with huge size to make significant profits. Loading up on size is called for at times when the risk-reward is in your favor, but you need to be able to handle the size. There is plenty of money to be made trading with modest size, especially in active stocks. You can make a lot of money trading in and out of an active stock with small size. Likewise, you can lose a great deal of money trading in and out of an active stock with too much size. Develop your trading skills, build your trading account, and slowly increase your size. Traders ask, do high-risk parameters affect your trading approach? Let's take a look at this email I received from a developing trader. Mike, since you are a consistent profitable trader, what would happen if you increased your positions in Apple, for example, from 2,000 shares to 7,500 at a time? Can you follow your set of rules with 3.5 times the additional risk with the same comfort? At what point does your consistent trading have to change because of the unusual high-risk parameters? Neil, when determining my trading size, I calculate first where I can exit if I am wrong. Remember, traders first have to ask themselves before entering a trade, what's my downside? I can often get out of 1,000 shares for a small loss. Rarely can I exit that same trade with 5,000 shares in an Apple at the same price. And if this is the case, then my trade is completely different. I repeat, when making a trade, our downside should be a ratio of 1 with an upside of 5. If, with my extra size, I now cannot exit with the same risk-reward ratio, I almost always cannot add this extra size. Also, it is a lot easier to exit if a stock trades in my favor for 1,000 shares than 5,000 shares. If it will be harder for me to exit if my position works for me with 5,000 shares, then I must factor this in as well. Franchise. Finding your right size. Listen in on this conversation between Franchise and me in the fall of 2009. Bella, what happened today? Franchise, I'm working on increasing my position size by 100%. I can't figure out how to do this in some plays. Bella, I like that. You will not be able to do this in all of your trading plays. To increase your size by that 100%, you will have to be more selective. You will not be able to exit that extra size while maintaining the same risk-reward with all of your trading plays. Some of them, but not all of them. We had an intern in 2008 who asked one of our traders why we just didn't open all of our trades with 100,000 shares. Alan Farley said it well. Experienced traders control risk. Inexperienced traders chase gains. The intern did not last long. When you trade with too much size, you do not prove that you can handle more size. All you do is prove you are not ready to handle this extra size. You should, as a trader, work on increasing your size with select trades. But again, this should be done incrementally. You cannot jump from 1,000 share positions to 5,000 without many steps in between. Again, do not pretend to be a trader you are not. The Steve Cohens of the world weren't moving markets on day one with their volume. And I know for certain that many readers trade with too much size on the wrong trades. My email box is saturated with anecdotes of these mistakes. And you sit there discouraged because your results are being infected by these unwise trades. Sizing is a skill that must be learned, one that will impact your monthly results. As you increase your size, your biggest obstacle will be psychological. Jonelle Stroh at West Virginia University, in the Journal of Psychological Science, highlighted the sunk cost fallacy, a mental state in which you are more likely to make a poor decision the more you invest. You may see your position working in your favor and be tempted to take some off the table prematurely. Franchise has remarked to me that this is something he is still working on as a trader. This is a very common hurdle to clear when you first start sizing up. This will just require some visualization exercises. Simply spend 5 minutes every day visualizing these setups. Manufacture the urge to lighten up in as much detail as possible. Expose the poor logic of so doing, and breathe through your fear. In a few months, you will rid your trading of these issues. Ari Kiev described this as skiing downhill and losing a little control of yourself while maintaining overall control throughout. Why comparisons can be harmful. Comparing yourself to another trader is not in your self-interest. Most successful traders are ultra-competitive, and it is human nature to want to be the best trader on the desk. But I just don't get it. Traders do not focus on how well they are doing, but rather compare themselves to other traders. This can be very harmful, and here's why. If you read any history of business or Wall Street in particular, success tends to be measured relative to competition. But when businesses and people try to be something they are not, the results can be disastrous. Just look at Lehman Brothers and Merrill Lynch, who tried to transform their businesses to be more like Goldman Sachs. How did that work out for them again? First, what makes you think that the trader you are comparing yourself to is in the same hemisphere as your trading talent? Just because someone sits next to you on a trading desk does not mean that his production has anything to do with your ability. Traders assume that since they are trained in a similar style and trade at the same firm, that they should do as well or better than the next guy. Let me be clear. The person sitting next to you, behind you, in front of you, a few rows from you, is not you. They may miss trades that you don't. They may wuss out of trades that you don't. They may not see the screen as clearly as you do. You are your own small business. How well you do depends on you, not comparing yourself to them. This should be your attitude. Steve, you are becoming the best trader on the desk. The Yipster. I am? Steve. You haven't noticed? The Yipster. Honestly, and I don't mean to sound selfish, but I don't pay attention to what others are doing. Steve once told me, before we started at SMB, I never had any idea how others were doing, cared how they were doing, wanted to know how they were doing. What did that have to do with me? If you make $2,000 one day and you top the leaderboard for your experience level at your firm, this does not mean that you had a good day. You had a good day if you traded well. You had a good day if you took advantage of what the market offered you on this day. Who the hell cares what someone else on your desk did? What does that have to do with you? You only care that one guy doesn't blow up all the firm's capital so that you can't trade any firm capital anymore. Otherwise, just focus on you. With all this said, there's a reason great traders have few peers. It's lonely at the top. Be mentally agile. If you develop a bias for a stock and it trades the opposite of your bias, can you still make money? Of course you can. You just need to be mentally agile. This happens to Steve and me a minimum of once a week. We gather all the pre-market information necessary. We have traded for over a decade. We are acutely attuned with the present market. Let's say we develop a short bias for FDX, yet it trades higher all day. We will still crush the stock. That's why we call it trading and not investing. I call this being mentally agile. Others might call it preferring to make money than be right. Once you get over this mental roadblock, becoming consistently profitable is within reach. Traders are smart, strong-willed people. It is hard for them to admit when they are wrong. It is difficult to quickly take the opposite side of a trade. I am reminded of the applicable quote from legendary short seller Jesse Livermore quite often. There is only one side to the stock market, and it is not the bull side or the bear side, but the right side. While it's easier said than done, make sure you're on the right side. Trading both sides. Rambus was in play on a Friday in June of 2009, and we made some chops long on a slow summer day to its resistance, 1780. 17.80 was an important technical level. RMBS collapsed from this level previously. See Figure 9.1 on your bonus material. 17.80 was an inflection point for us on this Friday and on Monday, and we made money on both sides using our trading skills. Let's discuss. Trading is not just about finding levels and then taking positions for most intraday traders. If it were that easy, you would not be listening to this book. Trading skills enable the intraday trader to determine when some levels will be violated and when some levels will hold. We combine our tape reading skills with our charting skills and our short-term intraday fundamental analysis to determine which resistance levels will hold. For example, on this Friday, we determined that the 1780 RMBS level would hold because there was more selling on the offer as RMBS neared 1780. There was a double intraday top at this level. The longer-term chart showed significant resistance. The buyers were hesitant to pay as aggressively above 1775. The news was not so important as to cause a violation of this significant resistance level on a first test. I lightened up with my intraday long position. Steve got short and caught a 50-cent down move. On Monday, we saw the strength from the tape in RMBS. The pullback was shallow on Friday from the important resistance level. RMBS was heading toward the 1780 resistance level again. The buying near this level Monday was aggressive. After 1780 held the bid, we got long. See Figure 9.2 on your bonus material. When the bid held 85 cents, we got longer. When the bid held above 90 cents, we got even longer. RMBS traded up another point. Chop. We did not just rely on the charts to make decisions. We watched the order flow, used some fundamental analysis to weigh the new news in RMBS from Friday, and read our charts. Doing so allowed us to make chops on the short and long side, trading RMBS on 2 separate days. When I write about reading the tape and learning how to trade, this is exactly what I mean. When I discuss developing trading skills to profit in any market, these are the skills that are necessary. Trading is not about making calls. Trading is not just about reading charts. Trading is about skill development such that you can trade a stock in play on either side. Just check out the trading in RMBS during these 2 trading days. How do I make money today? So, during our AM meeting, October 13, 2008, Steve highlighted Morgan Stanley as his stock of the day. Steve said, "I'm going to look for a pullback right on the open and then look for MS to trade in an uptrend for the day." Now, that is what I call a great call. On the previous Friday, Steve mentioned MS as a stock to watch. He remarked that MS might see 18 during the trading day. Yet another great call. Steve played MS on the short side on Friday and MS on the long side today. He made money shorting MS on Friday and long MS today. So did our head trader, G-Man, taught by us. I preach for our traders to be mentally agile. We preach for our traders to follow the intraday trend on almost all occasions. SMB teaches its new traders trading plays that allow them to make money short and long. When I was taught how to trade, we did not watch CNBC during the day. We did not trade with charts. We had no breaking news feed. We were taught to watch the stock and determine its direction. Some of the most profitable traders on our desk could tell you Derek Jeter's road batting average against right-handed pitchers on AstroTurf during the day. If you asked them the PE of eBay, they probably would return a blank stare. Now, obviously,
Pretty surprised that the number is 70% to the downside and almost 20% to the upside, and then 1% to the flat. So that's the number of stocks that are being tracked. I thought it would be a little bit less to the downside, but yeah, market clearly hurt. S&P 500 down about 0.94% today. Nasdaq down 1.12%, and we saw the breakout on the market just now happen. S&P 500 went above 4K, but looked like a fake out breakout. We're now right back under 4K, and the market's still struggling, and we know how important that 4K level is. Now tomorrow, if the market's not above 4K, I think that's going to be a big question mark also, and most likely initiating even bigger of a down move. Oh baby, speaking of a bigger down move, here's Pinduoduo now, 85 cents in the money. So let's take out some more size on Pinduoduo at VWAP as we're pushing down. I'm going to be honest, I thought Pinduoduo is just continuously going to have buyers around VWAP based off of that catalyst that they're trying to move into North America and so on. We saw Pinduoduo go from $50 to $70 in the span of a week. So, and the characteristics changing on the intraday time scale, I thought that we're not going to go below VWAP. So I'm wrong. Weakness coming in as the market can't get above 4K. Now $1 in the money on PDD shorts, and all of our other positions, which were slightly out of the money, are also pushing back to the downside for the flat territory. And APRN, which looked like it was going to work out for us, now right back to VWAP. So it looks like Sharif did the right thing by taking out some size above $7, taking that scalp, now allowing him to build back into the trade if he wants to and get a better average. So that's an opportunity being shown up right now on Blue Apron. But look at the market, baby. Market pushing back to the downside. Looks like this is the actual 4K short that I should have had. The market pushed above 4K, burnt the stops. Everyone who was short scalping all day in this range probably had their stop at 401, 402, 403s. The market pushed up to those 403s, 404s areas, burnt those stops, and now pushing back down after taking their money from them. Market makers clearly know what to do, man. If they didn't, they wouldn't be here as long as they are.
They're cleaning us out today, to be honest with you. Here we're gonna be completely out at that $6.72 level if it makes a new low. The bottom wick on this 1209 candle was $6.72. So if it breaks that, we're out. We took a piece out on the top there, so we're not. It's not gonna be too much of an L. And there we go. We're out. We're out there.
Yeah, I'm getting burnt.
Yeah, so that's a tough one. It's been a tough market today. I'll tell you the truth. It's been whether it's futures related or small cap related, it's been tough to trade. Let's go have a look at our futures trade. We're still out of the money on that one, but it is still in the upper end of the range, so we're going to continue to hold. We'll watch that one as it develops. Our FRGE trade, yeah, continuing to make a move up. We averaged in at that 40.50 level. It's currently trading at 40.58, so we're almost break even on that one, which is good because we're not really doing too well everywhere else, sadly. But let's have a look at what other small caps are moving. I see PETZ on the top of my screen there. Oh, PETZ is making a move. Well, let's have a look at that. Maybe on the other screen here where the futures are. Jeez, wow. Okay, PETZ, and it is probably an NQ stock. Yes, it is. Let's have a look at this bad boy. Yeah, continuing to make new highs on the day, now moving into that 445 level. That'd be interesting to see if we could get a dip trade in and around 425, but it's going to approach 450. It looks like it's going to break 450 going into that into the afternoon hour here. Volume is actually picking up quite a bit. It had been pretty docile the majority of the day, except for this candle right here at 11:36. But the volume is definitely picking up on this one. We're going to continue to watch this one, Prad. PETZ.
Yeah, I'm just trying
it
to
just
see what
broke
this
right
is.
through 450 as I said that into that 4. I think it almost touched 460. There you go. Now it's breaking through. A lot of strength on PETZ here. Wow, and to the $4.75 level. Look at that. Very, very strong on PETZ. Pardon me? Sean just gave me a piece of information. Tesla broke 280. Let's have a look at our big tech stocks here. Yes, Tesla, definitely the weaker of the bunch. You know, Amazon and Meta don't look that good. Apple's pretty much consolidating. So is Microsoft, but definitely Tesla, brutal red candle. Let me bring this down for you guys so you can see it. Here is here's what I look at for my big tech stocks. This one, Tesla, Apple, Amazon, Meta, Microsoft, and this is Google right here. Look at Tesla breaking through that 280 level pretty violently, now all the way down to actually touch 279.01. So any Tesla shorts, keep your eye on that definitely.
Yeah, currently just watching pets from where you left off at Sharif. It's still launching to the upside. 480 coming into play now. Most likely we'll see $5. Wanted to see what Pets even does. Looks like it's a Chinese company with about 42 employees as of 2021 recorded. Financials absolutely red, 620% down year to year on these financial statements apparently. So clearly they're struggling, but why are they doing what they're doing? And with the ticker as PETZ, I'm only going to be able to guess that there's something related to pets and so on. Their picture of their logo is a dog also. That's the most info I can get out of these guys at the moment off of a quick Google search on PETZ. But yeah, Chinese stock doing, I guess, once again, Chinese HKD type of moves over here. 29% up, apparently up 230% in about, what does it say? 23% in a week. I thought it said 230%, sorry, 23% up in a week. Should you sell? Question mark. Yeah, that's a good question, right? When do you take profits? Now that's up to the traders and up to shareholders themselves. I personally, just looking at the daily, clearing the resistance area around $4.30 and now pushing to 450, 460s. I think we clearly have bigger room over here. And look at that volume candle. Big volume spike just now, not too long ago, and maybe more of a volume spike later on.
Yeah, definitely. We're still in our FRGE trade here, guys. A few pennies above our average down. Volume really dropping off on this stock as, that lunchtime hour comes into fruition here at 12:30. Not much in the way of profits on this one. We'll continue to watch it. We still have a profit taker at that $4.90 level. Let's see what anything else moving here. I see HSTO showing up on my scanner, but not much on that one. Let's see LABD. LABD, what is it doing? Yeah, okay, above VWAP. It's made, a couple of dollar move. It opened at 21.50, and now it top wicked at 23.73. So yeah, we'll keep LABD on watch. It's not nothing too exciting here. Only up 8.75% on the day. Let's move to our Pets trade here. We're not actually in it, but what we're going to do is we're going to put a dip trade at that $4.45 level. I do like that. I see some nice support, some top wick candles, but it looks like it may go without us here, guys. So, this just might be a pipe dream to put anything here. Let's go put 445, and there it goes, right without us, top wicking at $4.90. This one's going to break through 5. Geez. I think, I'm going to buy into strength here because, last time I didn't buy into strength on FAZE this morning. I ended up trying to chase it on the way down, and I paid the price for that one. So we're long there at $4.84, and we have that average down. We'll wait for that. We're like a smaller size than we typically take. It's stalling in at that $4.90 level. There's huge size, 15,680 shares. That's not too big for a $5 stock. So yeah, we'll continue to see. Brad, what are you looking at? You looking at love?
Yeah, Larry Summers coming in with I guess renewing their membership. Has been a member for 1 year and a member for 17 months. Kind of weird how YouTube puts it. Confuses me a little bit. But yeah, welcome back to the family. Welcome back to the green side, as one of our coworkers used to say back in the day. Love has been very stable on this downtrend. Yeah, Love is I believe this is Southwest or Spirit. Love is Southwest. Yeah, Love is Southwest Airlines. Airliners today seems to be just a little bit of a muted move on them. Let's go see the overall ETF, Jets.am, which is your airline ETF. Come on, show me the Jets chart. There you go. For the most part, very muted. Looks like one of the sectors that have not been hurt too much today off this down move that the market has been providing us with, and now coming back under 4K. S&P 500 once again, bringing the Nasdaq down with it too. Looks like we can expect more weakness across the board for stocks, especially your Rivian is popping up on the scanners. Let's go check out what Rivian's doing at the moment. ENPH, Rivian. Shopify, Rivian trying to take out the low a day over here. Look at the weekly support around $31. I think if Rivian does drop, it could drop down to 31, but I don't expect too much of a bigger move from that unless we break the support area on RIVN. So Rivian pushing down. Pinduoduo now $1.10 in the money. So more profits coming in on Pinduoduo. Thankfully, I am holding some size over here to capitalize on said trade. If it does want to give me even more, than the VWAPs right here. I once again will reiterate, I'm not expecting the lower day fill at 64. If I get it though, I'll be very happy, man. I'll be very happy to get that out on said position. And Chewy has been doing nothing for the most part, but now pushing to the downside, trying to take out that 37 bottom. And if it breaks that 37 bottom, I'm expecting a bigger drop all the way down to $34, $35 on Chewy. Already down 2.5% today, struggling a little bit. Let's see if we can capitalize on that stock for myself. Kuljit with the €1 super chat in the morning. Thank you, Kuljit. Appreciate that. And it looks like we have 2 other super chats that I missed out. Kevin Miles. Kevin Kickin. Oh, okay, yeah, I'm not reading that. You almost got me there. Yeah, I'm not getting got. Good thing that I read that name slowly. Nice try. Says caffeine and TH eyeballs. Not sure what that means, but caffeine. Yeah, for you caffeine lovers, congratulations for. I don't even know. I'm congratulating. Thank you for the super chat over there, Kevin. And you almost got me there, but you're not getting me, buddy. Chris Cochran, $9 super chat, almost $10 super chat. 508311 float now confirmed by Bloomberg Terminal. S&P, the Ortex, Fintel soon to follow. Look for it to top of the list. 0 shares to borrow, 920% cost to borrow. What stock is this though, Chris? I'm trying to find the stock you're talking about, but I don't see it. Maybe it's on the super chat you sent from earlier. Yeah, you're talking about Getty. So you're talking about Getty. When I looked it up, the float for Getty said it's 176 million, and you're saying the short float is. Yeah, I don't know about this, man. I'm seeing different informations. You're seeing different information. At the end of the day, if your info allows you to make a trade for yourself, I urge you to make that trade because executions are what makes money, not ideas. But I'm not seeing the information you see, sadly, so no trade for me on Getty. I see Sean, however, or hear Sean talking about Tesla, so we'll send it to Sharif.
Yeah, Tesla is getting destroyed here, guys. If you took that break on that $280 level, you're almost $3 in the money. We're pushing $2.77, $20, $2.277.20 on that low side. I don't know. Was there a catalyst on this? What's going on? How come it's weaker than the other big tech stocks?
Mike.
Sorry about that. Yeah, sorry guys, my mic was off there. I was using the washroom real quick. Yeah, the break of that 280, you'll be $3 in the money pretty quickly off that 280 break. All the other big tech stocks are moving down, but nothing as aggressively as Tesla. So I'm wondering what the catalyst is there. But yeah, that 277 is being defended at the moment. We'll continue to watch that. That might be if the market can pick up, if the ES can start moving back up, this might be a nice bounce play right into VWAP here at 283. But currently it's a short. It's a short only. And the tape on my screen here is lighting up red. Let's have a look at the level 2. Do we have any significant size at any level that I can see? Nothing that's currently standing out to me. Let's scroll down to that 277, see what's giving us. Yeah, I don't really see anything here at the moment. Our PETZ, we averaged down to that one at $4.60. We're waiting for a dip back into that $4.80. It was a nice key level of support, between $4.40 and $4.50. There's some support. If it breaks that $4.50 area, we're going to be completely out of that one. The last trade that we're still holding is FERG, and that seems to have gone against us, guys. Let's have a look at FRGE. Yeah, it's moving back into that 200 EMA. If it touches, I think I already have a stop at $4.29. If it touches there, I'm completely out of that one. Tough day on the market today, guys. It's been, geez, for me anyway. I hope you guys are positive, but, it's been a tough day for me, Brad.
Yeah, someone said Sharif is so strong you scared the mic into silence. I wouldn't doubt that at all, man. I wouldn't doubt that at all. Okay. And apparently I sound like the Nemo, mine, the seagulls from Nemo. You ever seen Finding Nemo?
No, yeah, of course, yeah.
There's the seagulls from Finding Nemo. Mine.
Oh yeah. That's hilarious.
That's what when your mic was turned off.
I apologize, guys.
Nah, you're good, bro.
Yeah.
You're good. Good thing is his name isn't Mike. Not sure where that's from, but let's see some stocks you guys are trading, guys. Let's put some stocks in the chat. HPCO in at $13 right now, apparently. So HPCO, wrong typing. There we go. Jeez. HPCO, halted at $20.83. Is this stock now to the upside? Looks like we're gonna have some more nonsensical monster moves coming in on HPCO. Let's see if we can take advantage of this stock. How much shares did the stock already trade today? HPCO has traded 1.5 mil shares, and the flow is actually only 1 mil. So finally getting to one full rotation of the flow and trying to go higher than that one full rotation, halting at $20.83 above VWAP. It says it's up 247%. Just ignore that number. That's because the stock has just started trading today, and like all wheat stocks, man, you know what the story is, right? Sean has a great joke about it. You might as well roll the stocks that it's printed on and smoke it. Like, that joke still stands true. Look at Tilray, look at CGC. They're struggling, but one stock struggling right now that makes me happy is Pinduoduo, baby. Now $1.18 in the money on Pinduoduo. Can't stop, won't stop making money on today. But not yet. He's setting up, so we'll give him some time. You looking at anything? Yeah,
we just initiated a short on Tesla. They're hopefully looking for that 277 break. It's got to comply. The futures definitely have to comply on this when they move in tandem. So futures on this side, yeah, holding that 39.85 level. We'll watch Tesla. This one's definitely weaker than the other big tech ones. We'll watch for that 277 break, and if it does, we'll scalp some off there. The exit plan on this one, with Tesla, it could turn on you in a dime. So you're gonna have to give this one room and enter with an appropriate amount of size that won't go too far against you. I think that 279 level will be my exit. 279, yeah, 279.20. If it breaks below that, above that, I'll definitely be out on that one. But we're definitely looking for the break of 277 and to scalp some out there.
Yeah, Meta, someone in the, well, not someone, it's Brankles. Brankles, you guys know Brankles, is right shrewd off the floor currently. Called out that Meta is at 52-week low, so watch out for that 52-week low at 154.25. Could be coming in to break sometime this week, sometime next week. That's going to be a good short to take off that break, or even a good long to take off that bottom. Whatever sets up, we'll be able to, I'll put an alert for that and keep a track on that whenever time comes for that level to come into play. But now it's time to send it over to Brendo for social sentiment.
Hey guys, we'll give you another update here on what people are talking about on the social media board here. There it is, HPCO gray, meaning really no indication as far as direction, as far as the comments coming through on Hempaco. It's worth noting, they actually do have a tobacco side of the business as well. So a heads up for HPCO, 1 million share float. Apple, downside today. I highlighted it here because coming up next week we have, or the 7th, September 7th, we have the Apple event. We'll get iPhone 14. There was a number of additional analyst notes on that event and what they expect to happen, or what they expect to come from that event today. Apple downside in a big way, as we've seen, though. There's Lucid off of that offering today. Big move down as well. CFVI, AVCT, Bed Bath & Beyond. The market itself really leading the way here, no question about it. To the downside, there's APE and AMC heading in the opposite direction so far as sentiment is concerned, guys. Back to you.
Yeah, these guys are smoking that Tesla trade right now and giving me a little bit of FOMO. I wish I just jumped in as soon as Sean called it out, but Tesla clearly breaking to the downside, heading below 277. Sharif actually took that trade, so let's send it to Sharif.
Yeah, we took that $2. Where did we get in? We got in at
Hi, so you've caught me.
HPCO halted. HPCO will resume at 12:48 and 22 seconds p.m. NOGN may resume in less than a minute. RVPH. HPCO may resume in less than a minute. RVPH. KIRK. RVPH. RVPH. NEOG. NOGN may resume in less than a minute. NEOG. KIRK. KIRK. RVPH. RVPH. VLCN. RVPH. HPCO may resume in less than a minute.